Hi. Here at Wall Street Breakdown, we try to bring you the best financial news that we can on a daily basis. Saturdays, Sundays, it doesn't make a difference. We try to put out as much content and give you what is a bit of flavor into your financial news. It gets a little boring watching the same talking heads talk in the same monotone voice over and over again. It starts to really run on. You know what I mean? I definitely know what I mean because I've spent years and years watching these same talking heads, and sometimes hours of them talking can really blend all together. So for all the people out there who think that I have a bit of an ego issue or too much bravado, I assure you that this is somewhat shtick, and I'm trying to bring you this news with a little bit of flavor. Let's get into a Target earnings call from this morning. I'm Cody from Wall Street Breakdown. Now, at the end of this earnings call, after I'm done saying goodbye, Anthony's going to put up a little shot there that you can hit pause on. That's going to go through earnings, revs, and a bunch of the bullet points from this earnings call. We are going to do this from now on for earnings so that you don't have to just listen to me go on and on. Maybe my voice blends a whole lot too, right? Who knows? We're going to put that up there so that you can go back and have a little reference so you know exactly what I was talking about and why I think this earnings call was either good or bad. Target, earnings per share at 91 cents, beat the street by 5 cents. Revenues of $16.67 billion, beat the street by 70 million. That's up 1.4% year over year. So we've got good growth in the revenue department, a beat in the earnings department. Comparable store sales find themselves up as well, only 0.9%. But we understand that a lot of these sales are moving out of the store and moving into the digital realm where comparable store sales just don't count anymore. It's not a matter of traffic there, it's a matter of traffic to the website. And if Target's going to be viable in the near future, Target is going to have to compete with all the other companies that are making it much, much easier to do a lot of retail shopping without actually having to go to the retail location. Target's digital sales, which is that online feature that we're talking about, which has been growing substantially for Target, which is one of the reasons why Target is a retailer that I do still kind of like. I'm not saying to get invested in it, licensed professional financial advisor, please, but I definitely do like Target. Digital sales up 24% in growth. That is a significant number in growth, and that's what's going to keep Target in business. Transactions up 1.4%, but at the same time, the transaction amount down 0.5. We did hear earlier, about late summer, that Target was going to be kind of cutting prices overall throughout their store. Their stock took a hit from that. I think this is kind of just a trickle-down effect of that. So while transactions overall are up, the transaction amount, the actual price on the receipt, down 0.5%. Very nominal number, but could really have a lot to do with them just kind of cutting a little bit of prices to stay competitive in the marketplace. Target did give fairly weak holiday guidance, which the market didn't really like very much, but that's understandable. I think they also get that there's just a lot of competition out there. Maybe they don't want to get overzealous and overcommit to a number, and it might be a little more surprising then if they end up beating on the EPS and revs that they set forth for them, because I'm sure analysts probably fall pretty much in lockstep and don't really over assume what the guidance is going to end up being, especially with a company like Target, right? So Target's earnings per share, 91 cents, beat the street by 5. Revenues of 16.67, beat the street by 70 million. And like I said, that's up 1.4% year over year. For a retail company that I do kind of like, I think Target is doing fantastically as far as trying to compete in a marketplace that is dog eat dog right now. I think we're doing pretty fantastically as well. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, thumbs up for this video, all videos. Thumbs up for you for sticking around and putting up with me. I don't know how you deal with this. And comments. We want comments. That's what we want. We want to know what you're thinking. We want you to tell us what you want to see and how we can get better. Ultimately, this is about your portfolio. This isn't about me going on and on. I don't mind going on and trying to add a little bit of excitement to the financial markets, but I want to make sure that I'm satiating your needs and giving you guys exactly what you're looking for so you can go back to your licensed professional financial advisor and make some very good financial decisions for your family. That's our number one goal here at Wall Street Breakdown. We also have one other goal where we want you to have a marvelous Wednesday.